Hey everyone, so in today's video we are going to look at the stock market crash during the 2008 financial crisis.
It is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement in oil prices so fast, so fast.
Seconds to go until the start of trading at the New York Stock Exchange, and stocks are set to kick off lower a whole lot.
For those of you who are too young to remember, or just don't want to remember it, like me, here's a brief breakdown. This was a time of great uncertainty about our financial economy. I mean, just imagine your stocks getting hit so hard during the crash that the price of it was set back almost 10 years ago. The Dow Jones Industrial Average declined by almost 53%. Now imagine this, on October 9, 2007, the Dow Jones was around 14,100. By the time March 9th, 2009 came around, which is 2 years later, it was only 6,500. Is that crazy or what? In other words, in 2 years, the Dow Jones was cut in half. Now imagine you had your pension in this portfolio. You'd be scared out of your wits. So let's take a look at some of the events surrounding this crisis as reported by the media in 2008.
I think this is the most significant financial crisis in the post-war period.
There are fears the sell-off will continue on Wall Street.
Soaring gas prices, falling home prices, and rising unemployment.
What kind of recipe is that?
Overall, that's a recipe for a recession.
2008 was a bad dream. It was a bloody year on Wall Street and a real capitulation for a system run amok.
Down 1.7% here, a loss of 37 points or so. Apple shares are just getting hammered this morning.
We're down by between 3 and 4.5% generally across these markets. Let's talk about the speed with which we are watching this market deteriorate. We're red everywhere, essentially, down by 4-5%.
We're down over 16%. Dow at the same time has fallen about 18%.
The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
Nearly 250,000 homeowners are in danger of losing their homes.
The bankers made irresponsible loans to homeowners, permitted them to buy property on margin. Then the housing prices collapsed, the mortgages couldn't be paid, and the banks essentially became insolvent.
The heightened financial turmoil that we have experienced of late may well lengthen the period of weak economic performance and further increase the risk to growth.
But in hindsight, this was one of the greatest opportunities to buy incredibly profitable companies and actually get rich. I mean, all the big tech stocks such as Apple, Microsoft, Oracle, etc. were literally on sale for more than 50% off. But at the time, it was pure catastrophe. I can't tell you how scary it was when one of the big banks, such as Lehman Brothers or Bear Stearns, suddenly went bankrupt and literally lay off everyone overnight.
Lehman Brothers is going bankrupt, and financial markets from Asia to Europe are doing their utmost to prevent Monday from turning from dark to black. Employees of America's fourth largest investment bank saw the writing on the wall late Sunday after talks to pull them back from the abyss collapsed. British firm Barclays Bank said no thanks, while Bank of America decided instead to help another struggling bank, Merrill Lynch, in a merger deal worth over $50 billion. The U.S. government said it won't bail out Lehman, which last week announced more than $3.9 billion in losses. Shares in Lehman Brothers have plummeted more than 80% in 2008 alone.
It started in real estate, and it started with subprime, and that's the story everyone knows. How does that crisis in the suburbs of America move all the way back to the center of finance in New York? Money from other banks, and that money runs faster than any depositor can run.
So subprime mortgages begin to default. Lots of people are invested in those mortgages. Banks have a big stake. And so suddenly when banks look vulnerable, then they don't lend to each other anymore. Investors pull back. That's what happened?
Yeah, that's the crucial thing.
Lehman, like so many other investment banks and banks,
really got, quite frankly, caught up in the housing bubble. But like every bubble, the bubble ended, and we're now seeing the downside of that bubble.
In other words, Lehman not only created debt securities, bonds, backed by iffy subprime mortgages, it held on to them. When the debt started going bad, faith in Lehman collapsed. No faith, no credit, no credit, no Lehman.
We came as close as we have ever come in history to a total cardiac arrest, not just of the American economy, but the entire world economy.
Meaning everybody's afraid to lend to everybody else. Credit simply freezes, and an economy, a modern economy, can't function that way?
A modern economy can't function without credit for more than even a couple of hours, frankly, seconds. GE, the pillar of American manufacturing, was having a hard time getting short-term credit. So was Harvard University. Wage bills were not being paid.
I mean, these financial institutions have been around since the 1920s and were thought to be invincible. Luckily, we have the Federal Reserve as the lender of last resort in the USA. And again, the government, which is us, with our tax money, had to bail them out because they were too large to fail. And if they did fail, the economic system in the US would be affected and around the world. And the reverberations were being felt everywhere since credit was freezing up for everyone. Even Warren Buffett had to provide a lifeline and invest $5 billion into Goldman Sachs to shore up their liquidity because they were already afraid that they might run out of money. If they fail, it would have been a catastrophe.
When I made that investment in Goldman Sachs, that was not just having confidence in Goldman Sachs. That was also confidence that we would not unnecessarily drive over a cliff.
Well, that's it for today's video, and let me leave you with these words from Warren.
We'll have others. Humans will continue to behave foolishly, and sometimes en masse. That doesn't change. We get smarter, but we don't get wiser.
Thank you, Warren, and thank you for watching. If you enjoyed this video, please subscribe and smash that like button. Until next time, happy investing.